Now, Chinese companies have raised more funds through stock markets in Europe than the US this year for the first time. In fact, they've raised around 5 times more. More than $2.1 billion in total has been raised on the Zurich and the London stock exchanges. The trend shows Chinese companies' concerns over the US-China audit disputes. The two countries reached a landmark audit inspection agreement on August the 26th. But the fate of about 200 Chinese companies' listings in New York remains uncertain. Well, Tim Clissold is the author of a best-selling memoir on Chinese business, Mr. China. He has 3 decades of business experience in China. Tim, many thanks for joining us. Now, in 2020, I think I'm right in saying that China overtook the US as the world's leading destination of new foreign direct investment. That seems to be reversing a bit now. What's the state of foreign investment in China at the moment? Can you tell us?
So, sure, it's hesitant in the short term. But the Brookings Institution did a study about 2 years ago that said that the consumption by the global middle class between 2015 and 2030 will increase by the equivalent of $30 trillion US, and only $1 trillion of that will be in the US and Europe. Okay? And if you drill down into the numbers, most of the rest of it is in China or markets that are very closely affiliated in China. So from a strategic perspective, companies don't really have much choice about being there and figuring out how to do it. So there are tactical issues short term, but longer term, I think that people will continue investing.
Of course, Tim, attitudes towards China have hardened in much of the West in recent years, really. We've had the US-China trade deal, which dealt a big blow on foreign investments in China. What does it mean in practice, and are investors worried at all? I think
investors are hesitating. So I think that the overall situation is not terribly clear. You've got short-term issues, the whole kind of risk of COVID maybe receding, maybe continuing. You've got the whole political situation in China with the party congress and so on. So I think that people are cautious. But again, I think that, overall in a sort of longer-term trend, if companies aren't there, then they're basically going to nurture much larger rivals, and that's going to store, problems up for the future.
Now, European investment, interestingly, in China seems to be holding up a bit better. I think up by 15% in the first half of this year compared to a year ago. Yeah. Why is that?
So, I'm standing back. The US has been in the top spot for about a century, so it is much more sensitive about China's rise than Europe's is. And I think there's a fair amount of political issues associated with the US that aren't really reflected in Europe. We'll see how that develops.
Now, China's economy, of course, facing challenges of its own, a bit of slowing growth, the COVID-19 pandemic, of course, and some high-profile defaults in the property sector. How safe an investment is China in this kind of current environment?
You've always got to be very cautious about investing in China. But if you take the debt situation, China has relatively small amount of external debt. Most of the lending is inside the state sector, which is essentially owned by the sovereign, so it can all be conjured off. And if I think back to like the early 2000s and the workouts that had to be done then in the banking system, the problems that we have at the moment are relatively small, and the Chinese leadership has got pretty clear plans and experience for dealing with it. So I don't think that that's going to result in kind of like a Lehman moment.
Tim, as I mentioned, you have 3 decades worth of experience in China in terms of business. How has China changed over the years, and where do you see the economy going forward?
So China will continue with its cautious, pragmatic, experimental, gradualist approach to opening up. So China's never really suddenly been open and then is now suddenly closed. It doesn't work like that. So everything that comes out of the top leadership in China says that they will continue with this gradual opening up and easing, and they want to continue integrating into the global economy. So there are a lot of short-term problems. They may or may not get sorted out. They may grow into larger ones. Who knows? Nobody can predict that. But from the point of view of the current mindset of the Chinese leadership, they want to continue, I think, with this gradual opening up.
Tim, fascinating stuff. Tim Clissold, author of best-selling memoir on Chinese business, Mr. China. Many thanks indeed.